Good morning. It's Friday morning, last day of the trading week, but first day of the new series, that is the September series, but last day of September as well. I'm Sonal Bhutra, and in the Mumbai News Center, you're watching Power Breakfast. Well, that is all the updates that we have for you today, but we'll discuss them in greater detail. First up, let's take a look at what the Asian markets are doing. They have taken a weak handover from the Wall Street, so they're largely lower, barring Hang Seng, which is seeing gains of 0.4% as we speak. Taiwanese index, however, is down 1.4%. Across the board, there is a bout of selling that we are seeing. So we have something like a Nikkei, which is sitting with cuts of 1.5%. However, it's Shanghai, which is managing its head above water. It's up around 0.2%. And Chinese PMI data, it beat expectations. It unexpectedly expanded in the month of August, and maybe that is something that is working well for some of the markets as well. SGX Nifty, as a result of all this, is indicating that, well, the start for our own markets could be in the red again. So that one is indicating a downtick of around 22 points. It is not as much as the global markets are indicating, but we'll have to see whether we will see recovery, whether buy on dips strategy by traders will come back or not. But for now, open will be in the red is what the SGX Nifty is indicating. In the US markets, Wall Street ended Thursday's trading session sharply lower, with the Dow Jones sliding over 450 points, the S&P 500 over 2% lower, and the Nasdaq Composite closing with cuts of over 2.5%. CNBC's Steve Kovach gets a wrap of all the action on Wall Street.
Recession worries returned to Wall Street, with stocks sharply reversing Wednesday's one-day rally. The Dow dropped 1.5%, the S&P down more than 2% to a new low for the year, and the Nasdaq dropped almost 3%. Apple is playing a big role in Nasdaq's drop due to its enormous market value. Any move by the stock has a big effect on the index. And today, Apple's move is big. It dropped 5% after Bank of America downgraded its expectations for the stock, citing concerns about weaker consumer demand as the economy slows. That's the action from the U.S. market. Back to you in Mumbai.
Okay, let's move on now to the U.S. Quarter 2 GDP numbers. CNBC's Rick Santelli breaks down the GDP data and files us this report.
Still remains at minus 0.6%, still back-to-back negative quarters of GDP, still debated whether we're in a recession or not. Consumption actually improved rather markedly, considering this is our third time hoofing around the block on second quarter GDP. It moves up to 2% from 1.5. And here's the numbers we're all waiting for, aren't they? The price index, 8.9 last time, zoom, 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 up to 9.0. But it still remains the highest level since 1981, because in 1981, it was all the way up to 11%. And if we look at what's going on with regard to the core personal consumption expenditure quarter over quarter, it's up 4.7. Definitely hotter than the 4.4 we were expecting, but well cooler than 6.1 in June, which was the highest level since 1983.
Okay, now to the final update on our global market wrap. Sharp sell-off in European markets as well, with the French CAC, the German DAX and the British FTSE all closing with cuts of over 1.5%. The European Commission's Economic Sentiment Indicator, which aggregates business and consumer confidence surveys, fell to its lowest point since November 2020. Okay, all right, that's the global market action, but how will these overnight cues impact our own markets? We have a research team joining in to tell you just that. There will be a lot of stocks that will be in focus as well, and there is, of course, action from the F&O space as well, and looks like it could be a start in the red today.